TGIF, Market Chameleons, everyone join us for the first time. Thanks for joining the pre-market show with this man, all the way from Philadelphia, the city of brotherly love, Dimitri Pogamatic. How you doing, D?
Hey, well, how's it going?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen. If you guys are joining us for the first time, we do this show every morning really to help answer any questions you may have about Market Chameleon tools, data, analytics. If you want to come on a show and talk about a certain strategy or something unusual you've seen, you're welcome to come on the show. You could ask that question live by, we provide a link to Zoom. So if you click on that link, it takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand at the bottom of the screen. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear. You could ask your question live and direct. If you want to ask your question by typing it in, you could use that live chat on YouTube. Type in the question. Will's watching it. He'll read it back to me. And while we're waiting for questions to come in, people are still coming in, or there's a little bit of a delay. We'll start out taking a look at the pre-market report to see what's trading in the pre-market hours. Then if we don't get any questions at that point, I'll try to navigate to a different section of the website so we could get some insights from a different report. But if we do get questions, well, let me know. I'm going to take those first, after we finish pre-market report.
Perfect.
So pre-market report, these are stocks that are trading in a pre-market hours. We have a list of our most active stocks, our biggest percentage gainers and biggest percentage decliners. Coming down, I see 42 stocks made our percentage gainers list, 148 on our percentage decliners list. So from this perspective, right now we're lining up for more bearish bias at the open. But when you look at this list, you can see that there are stocks in there that are low cap stocks. We have ETFs in there, preferred stocks, closed-end funds, anything security that is listed on the major U.S. exchange. If it's trading in pre-market hours and it meets our thresholds, it could make this list. So what we want to do is narrow down this list to a smaller group of stocks to get more insights. And we usually just start out with stocks that are in the S&P 500. And to do that, we want to use the filters up here. And this one in ETF, when you click on it, you see a drop down and a list with a list of different ETFs to choose from. The top one, SPY, that's S&P 500 ETF here. So let's click on that. And when you do that, the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we see so far nothing made our percentage gainers list and 43 on the percentage decliners. So again, from that perspective, right now we're lining up for a bearish bias at the open. Couple things here. Also, we usually, I usually stop there and take questions, but if you click on one of these symbols, it does pop up. Let's just do like Tesla. It pops up an analysis or data giving you more insights of the pre-market trading. So you can see here, Tesla down 2.7%. You have these different tabs up here. Here, the VWAP tab. This gives you first a graph of what's going on in the pre-market hours. So you could see like where, around 8 o'clock as usual, that's when really the pre-market activity starts to tick up. More liquidity providers come in, the news cycle starts. So that's where you usually start to see the activity pick up right around here. I think, what do we have, like this couple inflation numbers today we get a bunch of numbers coming out. I think the markets are down, so you could see here where the volume picked up. Here we get a breakdown of the volume. So we talked about this yesterday, trying to take the data, translate to data into more insights, and try to model the behavior of the markets. And here, this first volume bar, this looks at prices, puts the volume in buckets to see where the volume was the heaviest, around what price, right? So if they're big, we could see here the volume here at the low end today, that's between 195, 196, 195.72, 196.07. That was where the heaviest volume occurred at those prices. Okay. And, kind of just gives you a visual of, where the volumes picked up, what prices, where there might be liquidity gaps, where, moves from price to price with low volume. And some people use that as kind of like inflection points of resistance, support resistance levels. So coming down to this middle one, we look deeper and parse the tape. So we see, all the trade conditions and so forth. And within this volume bar, we break it down who's participating on that volume. What type of trades are coming in? Is it very large, quick institutional trades? Is it more very small, sporadic trades that we would say like retail or small retail? Or does it look like professional size trades trying to re-hedge positions? And this is kind of the breakdown. So you could see here, kind of evenly distributed. The small retail will always be small in these big stocks, but this is kind of like what you would expect to see in Tesla, because there's a lot of retail institutional participation usually in there. The next one over, this shows the different trading venues that the stock could trade in, right? So even in a pre-market, it could trade on the lit exchange. So the lit exchange is here in the yellow, or it could trade in the dark pool exchange, which is here in this, like, I guess, bluish color. And what are the lit exchange? Are the New York Stock Exchange, the NASDAQ exchange, CBOE, BATS. There's a bunch of them now, and those are just regulated exchanges that post anybody's limit books, and anybody could access those exchanges, right? So the lit exchanges are public exchanges. The dark pool exchanges are privately run exchanges which are matching up trades internally and then reporting the trades to the Reg NMS tapes or consolidated tapes. And there's big difference in it. I think we've got into it before, but it gives you the distribution of how that volume is trading. Is it being internalized in the private exchanges, or is this order flow making it directly to the public exchanges, because there might not be liquidity on those private exchanges, right? So this is really quickly, we start developing a visual of what's going on, how are people trading, where are they accessing, who's trading, and again, we're taking the data and trying to translate it and parse it into the behavior of the markets. Okay. To get an understanding of what is going on. Here, down here, we also show a minute by minute activity in the trading in the pre-market hours. Okay, so you can kind of see how the price is progressing, the volume, the number of trades occurred for that volume, and how much it's ticking from minute to minute, right? So you could see how because that's a measure of liquidity, right? Within a minute, how much volume can this stock absorb? What's a high volume? What's a low volume? And what is a big tick versus small tick, right? So that gives you insights into any period where there's something unusual or something came in that's out of the ordinary, or where the liquidity changed. So that's you be going in there and actually looking at the minute by minute data, right? So that's down here. So quickly, just wanted to kind of go over a quick overview and explanation of this report. Okay. Are there any questions, Will, so far?
Well, I know I typed in what I figured your answer would be, but we did have a new Chameleon who just joined today, was asking, when do you close out of a losing options strategy trade?
Right. So, there is no blanket answer to that, right? It all depends on so many factors that there's no way to answer that, because what are the variables involved? What are your expectations? What are, what is your portfolio? Are there better opportunities? Are you moving on? There's too many variables to give you an answer to that. That's part of trading. Like, as a trader, you're gaining experience on that, right? When you should be, over time, know yourself, I'm getting, why did I enter this position? Why am I exiting this position? Those are really, things that over time and experience you will know, but there's no blanket answer, when is the right time to get out. Too many different factors play into it. One is that you might, your analysis of it, or your opinion or outlook has changed, or you've seen, you want to reduce your risk, you want to, you found a better opportunity, so you're gonna take that capital and put it into better use. So you could see here that there are lots of different reasons why you're getting in and out of risk, right? And that takes experience and knowledge, and
Yeah, the reason you may have executed the trade has changed, right? It could have changed.
Exactly. You could be getting out of a winning trade for almost the same reason as you're getting out of a losing trade, right? You found a better opportunity elsewhere, right? So even a winning trade or losing trade could have exactly the same reason of taking your capital, or everybody has limited capital, but taking your capital and putting it somewhere where you think there's a better opportunity or payoff or risk reward ratio, because you should always be looking for that type of scenario. Maybe you decide you're reducing your risk, or you just, you've changed your outlook, something, you made a certain risk assessment based on an outlook, but there's always new information coming out, right? Markets are continuously trading, and there's a continuous flow of information. And when the information changes, and then even at a loss, you're looking at it and saying, well, the risk reward, ratio now has changed with this new information. My outlook has changed. So I'm just going to exit it out of here and move on because I was wrong, right? I was wrong, or the circumstances has changed, or there's new information, and that has changed the whole, you know, the whole analysis, the whole reasoning to be in this trade. And those are things that you're constantly monitoring and looking after. So I can't give you a blanket answer. This is when you should do it.
That's what I thought you'd say. That was good. Thank you.
Yep.
Oh, we did have another question from another chameleon who was asking about where do you find SPX on Market Chameleon?
Right. So the SPX is that's an index. It's not a security that's actually listed on the major U.S. exchanges like SPY. It's a security you could buy it and sell it, right? So it's an actual security. SPX, it's an index, which is tracking, basically a derived value calculation. It's and the SPX is a different data feed and license than the data you get from exchanges, right? So the data that we're receiving, that's coming directly, or from the consolidated tape. So we purchase and license that data. But the SPX itself, that is not included in that data feed. It's a separate data feed, from a different vendor, so we don't have the SPX. We're working on bringing potentially just, the SPX options and coming up with a synthetic price for SPX based on the synthetic option. So we are looking at it, but right now we don't have an SPX section on the website. Right? And simply we just don't have that data. It doesn't come in into the feed that we have.
All right. Thanks for answering.
Anything else?
Actually, I missed it. Thanks, Rob, for pointing out. Michael was asking, I think you were on the pre-market page, the analysis, you were digging deeper into it. Can you click through the links to get to that so Mike can see how you got to that page?
Yeah, so when you're on this page, when you're on the pre-market page, if you click on a symbol, that will pop up below another, window. And in that window, what we did was we try to make it easier instead of navigating to the symbol and then doing it. In that window, you kind of have some related data, right? So kind of here's the news that we're picking up on there. You got the pre-market VWAP table, a breakdown of the volume. So you have some related data to start kind of looking through. And obviously, if you find something interesting in there, then you could dig deeper. But this is kind of like an initial peek on, well, what's going on, right? Okay, I see this, I see this happening. Let me take a look further and see, well, what's going on here? Like with the volume, who's participating in this volume? Where's the volume being traded? What is the news? The minute to minute, we can take a look at from minute to minute what's going on here. Where were the big spikes in volumes? Where were the big liquidity jumps, and so forth? So that's the idea behind here. So just click on that symbol, and what it will do is, you can close this. It'll bring up a window from below with the information. Okay. And here you get some pre-market This is where the pre-market VWAP was 197.40. So stocks starting to trend below that. Here's the high low. So you could see the range it's traded in so far and the volume of shares that it's traded in the pre-market hours. I'm going to close this. Any other questions, Will?
Helen, who's it's the first time I've seen her, she just said, according to TD Ameritrade Thinkorswim, IV rank for the SPX is 13%, and for the SPY is 25%. Why are they so different? And I know the math behind everyone's IV could be different, right? But that ranking system could be different. I'm not sure how Thinkorswim does their ranking.
Yeah, so I get this. Sometimes I get the questions about, I'm seeing something somewhere else, and to explain what I'm seeing somewhere. And there are different platforms out there. She said Thinkorswim, has a platform. They're calculating stuff, and Bloomberg might be. So I can't answer what they're doing and how they got to that number, because implied volatility ranking, it's a derived number, and it's based on the method that you're using. So it's a model. It's not a, for example, I could take a look at SPY, and I could see that SPY last price yesterday, $466. So I should be able to find that somewhere else, because it's actually a traded price. It existed. That's a data point. But when we talk about something like an implied volatility, implied volatility ranking, this itself is taking prices, and we talked about this a little bit yesterday. As a trader, as a researcher, analyst, whatever, you're taking prices, and the prices act as inputs into a model, right? And the model is trying to tell you something either about, human behavior, human expectations. I'll give you an example. When people look at the futures market, you probably, and I'm sure a lot of you guys watch CNBC, right? When people look at the futures market, there's a future where it gives you interest rate. There's an interest rate, but at the same time, a lot of times you'll hear where the markets are pricing in a 50% chance of a quarter hike, right? That is working into a model. That's saying what we're looking at a price, but that price, what is the expectations of the markets, right? And that you have to have a model to work through, because the market itself is just spitting out a price. Then you're taking the price, you're taking the volume, taking other data, and working it through to figure out what are people thinking, what are they expecting, what are they forecasting, right? And the implied volatility is the same thing. You're running prices, right, from the options chain, right? You're plucking out options, you're plucking out an option price, and then you're taking those prices, you're putting it into a model. Your model has different assumptions in it. It has a different methodology to get to this implied volatility, right? And the implied volatility is basically telling us that the markets are forecasting a certain forward-looking fluctuations in the market, right? That's what it is. So we're taking this price and saying, well, what does this price mean? Well, it means that the implied vol of the market is here 18.7, which is forecasting a certain fluctuations, right, of prices, fluctuations of returns in the market. All right, that's how it's working. But why is it different? Because my model, right, first of all, takes certain snapshots of the market. It has to then pick which prices, which expiration to use, which prices around that, the monies to use, how much weighting do we give it? How many days to expiration? Are you using calendars days? Are you using business days? Or what are you doing with holidays? What are you doing during, how are you adjusting if, it's 9:30 a.m. or 12 p.m., or right up at the end of the day? What do you do with markets that are very wide? What do you do with markets if your snapshot sees it crossed market, or all these exceptions, right? So our implied volatility, I could tell you this, and we stick to our methodology. There's absolutely no way that anybody in this entire world would be able to replicate exactly our implied volatility, because there's way too many things that are in the model, just like I wouldn't be able to replicate, a different source, like, Thinkorswim, because I don't know their model, right? Unless they publish exactly how they're doing it, like the VIX, they publish exactly what they're doing, but unless they publish exactly, line for line of code, what they're doing, there's no way to know how they arrived at their implied volatility or their implied volatility ranking. So you will see differences because these are competing models, but there's no way for us to explain, anybody else's implied volatility level or implied volatility rank.
Perfect. They did ask how there's a lot going on in the chat today. So he says MCIV 30% rank is 21%. He's asking how that is calculated. So how do we calculate on MarketChameleon? Right.
So we take, first of all, what is the 30-day IV, right? The 30-day IV, it's looking at a 30-day constant maturity implied volatility, right? So obviously you can't find an exactly 30-day constant option every day because it doesn't exist, right? So you have to use a methodology to calculate. You see I'm clicking through. So what you're doing is you're looking at the two expirations that straddle 30 days. You have a weighted average between them. You're looking at the implied volatilities with the weighted average with the strikes, and you come up with this 30 IV. So from day to day, you're using the same methodology, the same weightings, everything. And at the end of the day, we capture what did the IV end that day, right? So we look at the end of day IV and we say, okay, if we look at the end of day IV and we look back 1 year, so we look at 1 year's of data, 252 trading days, whatever it comes out to. We look at back 1 year's of data and we say, what percentage of the days was the implied volatility lower than the most recent? And that's where the IV rank is. So it's the percent of the observations that were below the most recent IV level. That's the IV percentile rank.
Perfect. Well, that gets us right to the opening bell. It just went off. I don't know if you heard Michael McCrae's bell ringing in the background, but the market is open and we have people departing to start their trading day. Awesome job, D. Great week. I know it was a shortened week, but you brought a lot of information to the entire community, which is always great. Thanks for everything, my friend.
Yep. Thanks everyone for joining. Everybody stay safe out there. Have a great trading day and hope to see you guys tomorrow. Or I'm
Trading
sorry,
peace.
Monday, right?
Oh, I thought we were going to do a
Weekend.
Saturday morning show. Talk about
No
our,
Saturday morning show, guys. Next week, Monday.
we'll see everyone on Monday. Have a great trading day today. Way
Yep.
to get to all those questions today, Dimitri. That was awesome. You have a great weekend and day, my friend. I'll talk to you later.